Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steven Ehrlich, director of research with digital assets at Forbes Crypto, to discuss the future of crypto lending and if we should expect more contagion. Steven, it's great to see you as always. Welcome back to Trade Talks. And I think the obvious question, I'm sure you're getting this all the time, when will we know that we've reached a market bottom?
Thanks, Jill, again for having me. Unfortunately, the answer is we'll know when we know. It's really hard to tell. I mean, when the Terra Luna debacle collapsed back in May, Bitcoin dropped below $30,000. Subsequently, it's fallen again with Three Arrows, a major trading firm in Singapore that appears to have gone belly up. It's dropped below $20,000. It even dropped below the previous high at the ICO craze, which Bitcoin had never happened before. Which with Bitcoin had never happened before. Recently, over the last couple of weeks, crypto in general has sort of, I guess, been on a slight upward trajectory after Bitcoin dropped a little bit under 20,000 after some of those collapses, as well as the exorbitant inflation readings from May, and then obviously the Fed putting together a 75 basis point rate hike in the month as well. That contributed to it. Bitcoin's been straddling a little bit above the $20,000 mark. With Ether, which had dropped below $1,000 temporarily, is around 1,000 or 1,100. Some of the altcoins, like decentralized finance tokens, have gone up recently, although they're coming back to earth. And I think right now we're in a bit of a waiting period to see what's going to happen next. The longer term trend is still bearish as far as I can see it. We're still in a highly inflationary environment, and the Fed's disposition is to be hawkish right now. I know a lot of analysts that I talk to are concerned and doubt the Fed's ability to sort of navigate a soft landing for the economy. And I think as far as surprises that could lead to jagged moves up or down, I think right now they still cater towards the downside. I mean, there are some lenders, some crypto firms in trouble, and we need to wait to see how they are going to unwind and if that leads to further market panic. So right now I think we're in a waiting period, but it still skews to the downside.
Right. So, Steven, do you expect more contagion? How else could this spread? It's not like it's specific to one company where management just made the wrong decisions, or their operating strategy just didn't play out as they expected. Do you think this could spread beyond just, the specific stories that we've heard about over the past month?
I do, because it's really hard sometimes to tell exactly when contagion starts and where it's going. The crypto community, I think, celebrated itself wrongly a little bit back in May when the Terra Luna fiasco unwound and destroyed about $55 billion of value. And even though Bitcoin dropped below 30,000, I think a lot of people felt that that whole ecosystem, that blockchain, was a bit walled off from the rest of the crypto world. We even saw people like Treasury Secretary Janet Yellen highlighting how the way that UST, a stable coin that ran on top of Tether, it was an algorithmic stable coin that required some Ponzi-like financial engineering, was different than some of the other major stable coins that people are concerned about today, like Tether, for instance. And the community kind of congratulated itself. Of course, we find out that there was contagion because this major firm out in Asia that controlled about $3 billion worth of capital, Three Arrows, was very long on Luna, had about a $200 million exposure to it. And that led to cascading liquidations and failures that are impacting other firms like Jump Trading and Voyager and BlockFi and so on and so forth. And I think there's going to be more. I mean, other areas that we need to look at, like certain mining companies were very leveraged on their balance sheets. I'm sure there's plenty of other exchanges that perhaps are playing fast and loose with customer funds. I mean, most people only talk about the big exchanges, the Coinbases, the Binances, the Krakens, the Geminis, but there's over 600 exchanges in the world. And there's really no overarching systemic regulatory architecture. So, and we were in such a weird environment under COVID where everything seemed to be going up and to the right. It was easy to kind of get sucked in and get greedy and take on more margin, take on more leverage, go long. And I do think we're going to see more of those stories come out. And that's definitely something that we're looking for at Forbes right now.
What's the future of crypto lending then?
So that's another really good question, because I mean, lending itself is a very important part of a modern economy. You have to find a way to allocate capital between savers and and spenders so that you can help build infrastructure, build capital bases and grow. I mean, spot trading in and of itself is not necessarily going to grow an economy. The problem is with crypto and DeFi, decentralized lending. A lot of this lending was done purely for speculative purposes. There was no real economic activity behind it. I mean, yes, some of it was used for trading and speculation and trading. It can be a bit of a pejorative term, but there are good reasons to have speculation and trading, price discovery, or arbitrageurs that kind of help narrow price gaps. That stuff is good. But when it's purely lending and speculation so that you can keep getting more and more of these tokens that have very little intrinsic value, that's a problem. That's all still going to unwind, I think. And then we're going to have to figure out like what are ways that actually include lending into what are ways to include lending in real economic activity. So it's not lending just for lending's sake, but it's lending within the context of some sort of, whether it's a game, whether it's mining for infrastructure development, whether it's some sort of payment system. There has to be a way to lending can't be the end all. It can't be an end in and of itself. I think that's probably the best way to do it. It has to be a means to the end. It can't be the end. And one other thing worth mentioning too, lending is still a pretty, even as big as it got in DeFi, it's still pretty immature. A lot of loans right now are still over collateralized, sometimes 50 to 75%. And they do that so that the lenders can protect themselves against these big price risks that we're all seeing. At some point, I mean, we have to get past this because lending in the real world, loans are not over collateralized. That's kind of antithetical to the entire purpose.
Right.
So there's a lot that still needs to be worked out when it comes to lending.
So how do you think regulators could potentially react?
So sources that I talk to, and honestly, just following regulators, because they're pretty public about what they're doing. I mean, right now, they're not doing much when it comes to crypto. This is not a systemic risk to the system. It would be a really interesting test if perhaps something happened to Tether, the world's biggest stablecoin, if they may get involved right now. But regulators, for the most part, and I'm talking about the US because that's the ones which I'm most familiar, they're still trying to figure out jurisdictional issues. Like what's the dividing line between the SEC and the CFTC when it comes to different tokens? SEC Chair Gary Gensler said this week that the only token he feels comfortable calling a commodity is Bitcoin, which kind of raised a lot of eyebrows because there is a prevailing belief that Ether should also be considered a commodity. And obviously the CFTC believes it so because they regulate Ether-based derivatives trading activities. So, I mean, and so right now, I think regulators, to be honest, are preoccupied with just figuring out the rules of trading, and they're not necessarily even interested in getting involved in anything related to helping out crypto companies. And in fact, if and when they do get involved, I think it'll be more the opposite of cracking down on what they saw as somewhat predatory or at the very least irresponsible behavior that unfortunately is hurting a lot of people.
Interesting. Appreciate the insight as always, Stephen. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks for having me, Jill.